I've been thinking about.
Yeah, I forgot to record this. Go ahead.
So, I've been thinking along the same line that you have advised me to do so. In I think one of the calls where I think I was long Intel and I closed it too early, and then you were like, look at the 30-minute chart. It just kept on going up.
Yeah.
And I would say my area of hesitation is because I'm risking $50 per trade. The commissions tend to eat into a lot of the profits that I tend to make. And when I'm running 80% of that position, so $10 a trade risk, commissions, like a round trip for me is $5. So that's,
10%.
Yeah. So I'm wondering. So now the way I'm thinking about it is like I like the way of, okay, start intraday, and then if the trade is going well, close 80%, run 20%. But then I think I'm thinking now that I want to do that once I start risking production level sort of capital. And for me, that would be about $100 a trade, I would say.
Yeah.
So at $100 a trade, 80%, 20% would be $20. So I think that's a bit more reasonable in terms of, covering the actual trading costs. So from a business point of view, your break even makes slightly more sense.
Yeah. This is what I would, I just want you to think about a businessman point of view. That the things that we do on the initial phases, we're looking to leverage 10x twice. So I think what you've discovered is that $50 a trade is for you a pilot program by which you are absolutely, you're test flying, that you are willing to commit a significant sum of money to find out what the results are after some preliminary prototype. And this is everything from paper trading to back testing to one share. Everything short of $50 is you doing prototyping. And then test piloting is the first serious level of investigation. And so you want to make sure that you have done enough of the due diligence to justify taking on a more significant level of risk. Well, in my view, what we do is once you test that stuff, until you get up to full production, which is 10 times that, you let the results of live trading with significant money start funding the increase of risk per trade. And whatever step that is, fine. It should be a formal. Now, you could also do that continuously. Look, I'm just going to use X% of the portfolio so that as I get more successful skills. I personally like the idea of making a formal decision to increase bet size in the same way that at a poker table, I'm going to spend time at each table learning all of the things that are to learn about trading at a new level of risk. Like the thing about the percent, what if you were wildly successful here and now suddenly instead of $50 a trade, you jumped up to where you're now trading $500 a trade because you had one massive win and you haven't learned all of the incremental lessons that come from progressive resistance. That's what I worry about more so than I understand the mathematics of to me, once I get to production level, everything after that should probably just be a percentage of what it's earned. That's fine. But to me, there is a series of going from test pilot to initial system to limited production to what we call in the Army full rate production, when I've fully committed to buying out the entire thing. That's how we acquire combat vehicles, which are incredibly expensive. We're going to buy 3,000 M1 main battle tanks. Each one of those cost about 40 million bucks. So that's a significant amount of money. And we start that with the prototyping and pilot programs, and then initial operating capacity to learn, to start fielding the next tier, until we make a final decision to go to full rate production. Like we may have only bought up to 500 tanks and fielded 2 different units, so that we have extensive field experience in real units on real world missions to learn through use before we commit to building the last 2,500. Because although it cost 40 million bucks a piece to make that tank, if we took that version and then made 3,000 of them and then had to retrofit based on the lessons learned of actual use, that's even more expensive. So I sort of believe in this idea of scaling in a systematic way until I get to whatever my initial risk was. That was the first serious risk, and I think 50 bucks is correct, because that's dinner for 2. Because you could have just gone, and had dinner. That's your 1R. So you're going to treat that with respect. Whereas all of the trading in here was investigation. You're not worried about the cost of the round trip. Here, you are concerned about the cost of the round trip, and it's 10%. So that's why, to me, that's what you're going to tip the waitress anyway. So that seems like a reasonable hurdle to get over. And if I can perform positive expectancy with a 10% hurdle rate, now suddenly I have a system I can believe in, because the $5 round trip doesn't increase when I go from 50 to 500. And now the 10% has become 1%. And that's where I gain efficiency by going to economies of scale. So I want to make very sure that before I commit to this one, just to reduce my admin cost, that I have learned all of the lessons through use. So I think that should take at least 1,000 trades. Change my mind. You know what I mean? And then you decide what the stages are. To me, it's sort of like 50, 100, 150, 200. And I say 150 because if you did it at 50 and it worked, and you did it at 100 that worked, you might want to keep doubling it. That's why I say be patient one more time and just add another 50. And now what I've done is I've got 4 levels of identical improvement. And after 200, maybe it's 300, or maybe it's 500. It's probably 300. Every time you're, hey, I feel satisfied that I was 200. I feel like my next one should be X. Take half of that. And that way you'll know quickly. But it doesn't take you 100. You could probably do it in 30. Always at least 30. So what I would say then is the tactical pattern are the ones where we learn the fastest how it can, and it has no overnight risk, and I get lots of iterations. So I can get sensory overload, or I can just get over it and just get past all the hype and get right to the pattern and learn it in the shortest amount of time. And then, because these patterns are fractal, it now becomes easier to scale into swing trading. And I would call that the grow pattern, that, hey, this thing started off and it just kept going, and I can use markets money to just, now I'm in the same pattern, and now I'm on 30 minutes or daily charts, and then the same logic will get you even faster into the core. What's interesting about the way we trade is that swing trades are a great source of targets to begin to learn to day trade with. So I'm already thinking about the swing trade as a source. And then I can see the day trade simply as a way to get well started on day one. So if I have a swing trade anyway, and it gave me the initial signal, and I was able to make some money on day one, let me make bank on 80 of it, and let me keep 20%. And now I've got the overnight risk. I've got the right level of overnight risk. And if that works on day two and day three, it turned out that I had a very low risk way to get into the swing trade anyway. And then you can start seeing the connection between the fractal patterns on the swing and the fractal patterns on the day, and you realize, oh yeah, that's what he means by fractal. It really is the same pattern. And now I can become very efficient. And then the leap from swing to core is basically instantaneous, because now you've got days and weeks to decide what to do, and you already understand the different level of scale between the different time frame, and it's very easy to go from swing to core. Now, going the other way, going from core, it's, I think, very easy to learn how to pick some of those to become turbo swing trades. You just treat it as a swing trade, and now what I have is, it's the same core position that I had a 10% trailing stop on, and I was willing to just go to sleep on it for a whole month and see what happens. And now I can actually learn to swing trade that, and that thing can actually become, I mean, why not? That thing can now become a tactical day trade, because I'm already in the position. I mean, you want to talk about efficiency and lazy man's approach. You have something that was a core and you're swing trading at it, and you just put a day trade on it too. I mean, this might have been 50 shares. This might have been, 300 shares. And this one might have been 1,000 shares. And now what you're doing is, when you go down the ladder, you're performing turbo trading and leveraging the higher time frame. And when you're going up the ladder, you're using you're growing the trade from what started off as a tactical trade and just kept going. So the learning style that I think that you're using is that having, I think, satisfactorily explored the day trading opportunities and settled on a particular style that you can now pilot, that it's relatively easy to add now the swing trade mentality to grow on that one. I would just keep in mind where you are is from the core, swing, and day trade, is that you're right at that cusp between day trading and swing trading. And especially, I wanted you to see that the swing trade candidates are great ones to day trade, and that the successful day trades are ones that can grow into swing trades with markets money. But also, once you start connecting the initial pattern, now suddenly when you're swing trading, the patterns on the swing trade become more important than just carrying a percentage of the day trade. You can actually start managing it according to a set of rules that you will write for the swing trade. It's the same kind of trade architecture and geometry that, it's still the RL10s and the PSAR flips and all that. And you can learn to tune that as it makes sense. But at some point, you can relax and just let that thing be a swing trade and sort of cut it and say, hey, that thing is now a swing trade, and I'm just going to manage it that way. And hey, that thing, some portion of it is now a core trade, and I'm just going to leave a 10% trailing stop on it forever and let it go. Because all the risk that I have was paid for with markets money. So this little summary supports that, hey, I'm growing the trade and I'm starting with an area of competence and I'm adding the next logical step. And so now you're getting this pathway of little chunks and adding strategies and systems to a daily engine, a daily day trading engine. And the nice thing is that the day trading is the most adaptive. And if the market changes dramatically, your day trading loves that because it's going to take advantage of it. Then the protective stops on the swing trade will keep you from disaster. So as long as you maintain that as the engine of adaptation, you'll be in great shape. So, sort of in conclusion, what I would say is just go back and take a look at your notes and your thought process, whether they were mental notes or, written notes. Just kind of check each one of those and then, double check, Hamad and Ken stuff. Where were the things that we both did? What did you have that I didn't have? What were the things I had that you didn't have? Maybe think about those things and revisit this or adjust. And then what you come up with, the intersection of those is sort of your H plus, H plus K or whatever, is now you now have a tool to think about all future business opportunity. Now, as a businessman, what I want you to think about this is this this systems trader came into you with a proposal, and now you, the business owner or the chief of staff of that business, now have a standard way to evaluate this proposal. And this proposal is not just what you come up with, but any other person that comes in and says, hey, here's my plan for trading. What do you think about it? You now have a tool that you have built and that you have some confidence in because you know where it comes from. Now you can evaluate any trading opportunity, any system proposal, and think of it in that way. This is the shift from a pure trader mentality to a coach mentality to a business operator's mentality. You now have 3 different frames of reference to look at an opportunity, whether that's an individual trade frame or a series of trade frames or an entire strategy. That's what we mean by reframing and perspective shifting. So I think you're in great shape here. And that's everything I wanted to say about that. What else you
got? Thank you. Thanks for that. That was really good.
Yeah, I think you're in great shape. This one I think was an important one. Understanding the life cycle of systems development, protocol, dummy, prototype, to a pilot, to initial production, low rate production, full rate production, and then everything after that is scale as a percentage. So those are the 3 things that we look at when we think of production. This is just enough to just start testing the idea, 1 share. And you don't care about the admin cost. And then on this one, I would just think whatever your admin cost is, take 10 times that to figure out what you should be it's not a pilot until you're trading at 10 times your admin cost, so that you can overcome a 10% hurdle rate. And then your full rate production is going to be 10 times your pilot rate, because that's your serious business. And now your pilot rate, because you're only at 1/10 of that, this reduces your risk. You feel like it's risky because you just scaled up from one share and now you're starting to be concerned about costs. But you offset that by saying, yeah, but I'm really going to scale this to 500. And so now 50 is really a low risk way to trade. So you're talking yourself off the ledge. Even though you've added risk, it's nowhere near the risk that you're going to be at. And all along the way, you're saying, look, I'm going to scale this and have with other people's money till I'm getting 5,000 a trade. So even though I'm trading this one at 500, it's nowhere near the level of terror that I'm going to experience when I get up to there. So it's a way to talk yourself off the ledge by saying, hey, look, I'm only trading at 1/10 of where I intend to be. This is the power of 10x thinking. That's a really important way psychologically to be able to grow. Okay. All right. Any questions or comments from Greg or Brian?
No, I'm good, Ken. Thank you.
Hearing none. This is free chicken. I'm going to put it in the creativity course because I did talk a little bit about perspective shifting. And even though you guys are not in the creativity course, you kind of are. But that's the stuff that we do routine. That the creativity course, when the time is right, is 30 lessons. And you can see what it is doing for Jeff Southern and Luke and Sunal and Jeff and Bill Scheit. Every one of those guys that's doing production level teaching for me has gone through that creativity course, and it was transformational on perspective shifting. And perspective shifting is the core of Fletcher's teaching. And that was just approved and recommended by the National Teachers Foundation for kids from kindergarten to grade 12 in the US. And it was just featured on CNBC, the research that he did on building resilient children, which was based on the pilot that I did on building resilient children at this summer soccer camp. Because I did perspective shifting with them at the end of every session to lock in some of those lessons to get their mind right. Now that they were tired and hot and worn out from all the soccer, their minds are especially pliable. And that's when you install all the little creativity seeds that will make them strong. So I went out and watched them playing this weekend. This was the first weekend for playing. And I saw about 20 of my players from the academy and from the summer soccer camp playing we got about 500 kids in the rec program, and you could see the difference in each one of those 20 different kids. They freaking knew what to do on the field. It was like men versus boys. That was at every age, you could see that. So it was good to see parents and all the kids. They were all happy to see me because they knew I'd been sick and had undergone surgery. So it was really a good day on the soccer field. So anyway, that's my pitch for creativity.
When would you recommend that we kind of sign up for that creativity course?
As soon as you feel a burning urgency, and then wait 2 extra months. It's 30 weeks. There's almost I would not do it while you were also beginning to explore the swing trading frame. But when you get to the same level of comfort on the swing that you now sort of feel on the day, that's probably the right time. because it will ask
Okay.
you to step back from trading a little bit, and it's going to be working on foundational psychological and systems thinking concepts. You will then apply it to the work that you're doing. But I would say my expectation is, not sooner than about 3 months is when I would be looking at it. I think you'll be ready at that point.
Yeah.
And because you guys have suffered through foundations, I'll give you a break on that course too. So anyway, that's everything I got. I'll get this posted and published, and see you on down the road shortly. Take good care.
Thank you, Ken.
Thanks, Ken. Take care.